First, we just want to thank everyone for joining us today on the Trade Exchange Squawk. We're going to keep this pretty quick. The Trade Exchange team, we're off to a Alzheimer's walk this week and this morning, actually. So we're going to try to keep this as quick as possible this morning. Just to give you a quick recap of last week. If you look at the end of last week's numbers, without following the market, you would think, oh, it must have been a slow week with small gains. But if you actually look at this market, you would see how much volatility we are still fighting with. Monday and Tuesday, we saw strong moves to the upside, only to be shadowed with strong drops to end the week. But we did end the week slightly higher, up green about 1 to 2%. Markets ended the week weaker as the employment report showed a better than expected jobs report. Both the payroll and unemployment numbers came in better than expected, which continued to solidify the mindset of a 75 basis hike in the fourth meeting in a row. Oil markets, another thing we have to worry about again, as CPI data points were weaker as of late due to energy prices. But now with oil up over 15% this week and ending about at $93 following OPEC headlines, the question is, what happens next? As we have been saying as of late, bad news is good news for the market. Traders want to see weakness in the economy because it would show a possible pause or change in the mindset of the Fed. But in all reality, are we thinking too much and should just trade what we know? We said weeks ago, even months ago, to everyone out there, from the media personalities to the social media Warren Buffetts, who all believe they know the direction of markets, please give us your crystal ball for the future, because it seems to us everyone knows what is happening next. But all we know on our side is the truth. Sometimes in the market, capital preservation is key, and sometimes it's best to just sit on your hands, watch, and wait, especially with recent headlines out of the Ukraine and Russia conflict. This week is a big week. Earnings season begins with the banks on Friday. S&P 500 companies are set to report their lowest year-over-year growth since the third quarter of 2020. On the economic side, is all about the CPI on Thursday. We are expecting a print of 8.1% year over year and a month over month at 0.2%. On the core side, year over year, we're expecting 6.5%. Now, just going over the week ahead coming up. As you can see, top earnings this week, we do have some of your banks reporting on Friday. On Monday, markets are open, members, but the U.S. bond markets are closed. Fed speak, we do have Feds Evans and Brainard. And once again, the China markets reopen following their holiday week. Tuesday, Fed speak Harker and Mester. On Meta, we also have their annual event. And the IMF is coming out with their World Economic Outlook. Wednesday, we do have your PPI final, followed by your FOMC minutes. On the European side, we have industrial production, Fed speak, Barr, Kashkari, and Bowman, and the OPEC monthly report is published. Thursday, all-important CPI, jobless claims as well. On the European side, we have the German CPI, China CPI and PPI, and the G20 is meeting. Friday, U.S. retail sales and consumer sentiment, Fed speak Cook, and the BOE has their emergency bond buying ends. As always, members, keep in mind, always check the morning for an updated look of your Fed speakers that are on tap, since they do add throughout the week. Company events for the week, as you can always see right here, top shareholder meetings and analyst calls. As always, if you have any questions or comments, shoot us a message via the Ask the Desk or shoot us an email in regards to any commentary. Top conferences for the week. Looking at your economic calendar for the week, as we mentioned earlier, Monday, members, keep in mind, we do have Columbus and Indigenous Peoples Day, but the stock markets are open, bond markets are closed. We have some Fed speak on agenda. Tuesday, as well, Fed speakers that we'll be watching. Wednesday, we have your PPI, as well as the agriculture report, Fed speakers throughout the day yet again, and the FOMC minutes in the afternoon. On Thursday, we have your CPI data, as well as your petroleum report and nat gas. This number usually happens on a Wednesday, but due to this bank holiday on Monday, that has changed. Taking a peek at your Friday, we do have retail sales and consumer sentiment, followed by more Fed speakers. So we do have a pretty eventful week. Keep in mind Friday as well, we do have your earnings beginning. So we do have Fed speakers throughout the week, that as always. Your international calendar as well posted in the weekend report. The one thing we'll be keeping a close eye on is Thursday as well, with the CPI in Germany, PPI in China, and the CPI as well. Earnings, as always, coming up. We do have Thursday. We do have some action in the morning, but the key things are Friday. We do have your banks begin their earnings reports. Fear and greed index still in the extreme fear at that 22 level. So we're going to be keeping a close eye on that as we go through the week. Weekly sector performance strength, which we kind of expected in energy, over 12.5%, following those comments out by OPEC over the weekend. Over the week. So we did see strength in the energy markets. Weakness side, a little weakness in real estate, utilities, and consumers discretionary, but we did see quite a bit of a mixed bag this week, following the strength on the beginning of the week and the weakness to end the week. NEC comparisons seems like a little level off this week. Keep in mind, this is COVID, and then we just have a little level off in markets right by those previous June lows. Taking a peek at your target rate probabilities, as of right now, we are expecting over an 80% of a 75 basis point hike. Year-to-date returns, we did see not much action. You would think that, following last week's activity and volatility, there'll be a lot of changes, but the clear changes in the energy markets, as we did see strength in heating oil. Look at this number. Previous at 38%, this week at 73% on heating oil. Keep in mind, we are going into the winter season, so it'll be interesting to see how this would impact the everyday consumer. Gasoline as well. Look at this jump. Previous at 14%, now at 32.99%. Crude oil from a 6% last week to a 23.92% on crude oil. So this week, last week, it was all about energy. Seeing these moves is just quite shocking, keeping in mind how important energy was to the weakness in the CPI inflation report. We'll see how if this continues, what this impact would show on future reports. Your AAII investor sentiment survey continues to be on the bearish market mindset. So we are watching that. We did see a little uptick on the bullish side. We'll see how this correlates into markets this week, especially with earnings coming and the CPI report on Thursday. Your sector outlook weekly, clearly energy continues to be the main front of strength, up 48% year to date. Weakness across the board, with communication services continuing to be the weakest in the bunch. IPO lockup expirations, we do have a few this week, as well as some expected IPOs. On the FDA calendar side, which is expected or estimated dates we are expecting some data. We do have just one on Friday, EWTX, with data presentation on EDG 5506. Now taking a quick peek at charts real quick, and then we'll do a couple questions that we had sent over via email. And if anyone else has any questions, just shoot us in the chat box. This week we added another chart. We added gold. We're watching gold on this downtrend, tested a few times, and ended the week right by that support level. So we'll be keeping a close eye on gold to see if there's any movement to the up or downside, watching this support level for a possible drop, but keeping an eye on that downtrend for any possible upside move. SPY daily, looking at a chart. This is a 3-year chart. Since we did hit new lows, we had to extend that chart. Last week, we did see that downtrend break that we saw, that we mentioned could see a possible upside move if that break is seen. We did see actually an upside move of about $15 on the SPYs. Following that move, it did touch resistance. We had that drawn in from the past weeks at $380 level, hitting a high of $379.46 and sold off back to support levels. So right now we are watching this market as a technical market, clearly, which we've been saying for weeks on end. This is a clear indication on the SPYs that downtrend break, saw that $15 pop, tested that support resistance level, sold back to support at the 360s. Looking at the Nasdaq daily, we added the Nasdaq chart as well, trading right by key support levels. We are watching this 10,500 level as a key indicator for a possible continued move to the downside. So we'll be watching this if there's any indication for any continued move. This downtrend is extended, so it's a much higher level above 11,000. So we'll see if we continue to trade in this 10, 5, 11s range, or a possible break to the downside. As always, that CPI number could be the key for any directional move moving forward. So we're looking at your XPX daily with a moving average look, continuing to be to the downside. We also have your triple Q daily, watching with your moving average look, trading it right at support levels with a negative moving average to the downside. So watching your IWMs as well. This charts, we send these charts over week by week. We just add on the new data, trading right by support levels with the negative moving averages continuing. Your 10-year yield weekly hit that 4%. We mentioned last week that resistance level did sell off, but we are seeing a continued trade around those highs. A more clear picture on a chart by chart basis, traded right to that uptrend. This is no change to this chart, members. Once that downtrend was broken, continued strength. Even this, this week, we did see a test of the downtrend, but no break. So we are continuing to watch an upside move on this 10-year yield, which we know is a cautious and negative tone to the markets. As of right now, we did end the week at the highs, following that the weakness over the employment report. So we are seeing that strength in the 10-year yield continuing, trading right off of technical trend lines and support resistance levels. IWM weekly, no change to the chart as well. Traded right in the range that we had already drafted from last week. It's trading in the range of the 168, right by that support level. So we'll be watching this very closely this week. That 160 level is key in our opinion. And if that level is broken, members, there's nothing for, as you can probably to like the 140s. We'll do a little more work on that, but that's what we're watching on the IWM. If that 168 initial support level is broken and that 160 key level is taken out as well. So that's the IWMs. HYGs as well, more technical looks, all negative across the board. We'll be watching this as well throughout the week. Euro, continuation on that downtrend, which was tested, I think it was like 5 or 6 times, excuse me. So we're watching this euro. We're watching for a possible move in the euro if that $1 parity level is broken for a possible upside move. This downtrend, it goes back to the beginning of the year, actually. So we're going to be watching this for any possible move to the upside. Keep in mind, members, this is a weekly. So, if we do see a break during the week, we'll be watching that on the following weekend report. Your VIX continues to trade in that range, the 20 to 35s. We haven't seen that. A lot of people are asking. We haven't seen that quote unquote fear move that we've seen, during COVID and during the 08, 09 debacle in markets. So we are watching to see if we do get that possible spike that we see here that did in a way show a bottom in the markets, but still have not seen that fear indicator in the VIX. And to be honest, members, I don't think we're going to see that fear until reality hits on Main Street. The markets are seeing the weakness, but Main Street still has not. We're still seeing people shopping, dinners, going out, traveling. So the mindset of the weakness that's been hitting the markets has really not set in yet with consumers. So once that hits, then we think we can possibly see that possible spike of a fear. But as of yet, we still have not seen it occur. And maybe the Fed is right with the jobs market. With the job market so strong, it's not dropping to the actual consumer. So we'll be watching that as well. Oil, what can we say about oil? Pure technical chart, no changes, members. Downtrend broken, straight shot to 93. Downtrend broken, straight shot to 93. So we are watching crude oil trading right by resistance levels now. So we'll see what happens this week. But clearly, when the OPEC came out, that technical, it was a pure technical bounce. and we are watching that strength continuing in crude oil to end the week. US dollar, no change to the chart. Once the downtrends were broken, we did see the weakness, but yet again, a test of the uptrend. So we are not seeing that long uptrend break to show continued weakness. Tested the uptrend, ended back into the 112 levels. We'll see what happens this week on the US dollar. Bitcoin, no change to the chart. Finally broke that downtrend at 20,000 level, but on very, very little volume. It feels like the crypto mindset has slowly dissipated. So we are waiting to see if any volume comes into any of these technical upside breaks. As of right now, that break showed no volume, no headline news, no headline anything on crypto. So traded back below 20,000. So we are watching this base here. If we can see some more headline in regards to crypto to start to shoot this back up to possible 25s. But as of right now, there's nothing. So members, just wanted to thank everyone for joining us. We're going to take we had a couple quick questions as always in the via email from our members. Some of them, as always, asked us our thought process going into the week. Members, this week we believe we'll see, we're going to be keeping a very, very close ear in regards to the Ukraine-Russia crisis, especially after what happened over the weekend with the Crimea bridge attack. So we'll be keeping an eye and ear in regards to any headlines out of Russia regarding any possible retaliation following that attack. This week, economic-wise, we're watching the PPI final as well as the FOMC minutes just to get a better indication on what the Fed is thinking. But it's all about this number on Thursday, 8:30 a.m., the CPI report, and members as well, this retail sales. We mentioned earlier, it's not really seen in the consumer mindset as of yet. So we'll see what the retail sales show as well as consumer sentiment. But the most interesting aspect as well is earnings season is starting. We mentioned earlier that this earnings season, in regards to what is expected, we are not expecting much on earnings this time around. So it'll be interesting to see how the banks started off. We have seen a lot of preemptive moves in regards to earnings, in regards to lowering guidance, lowering sales revenues. So it'll be interesting to see the outcome on those earnings reports following the recent weakness in markets and the increase in the interest rates by the Fed. So we'll open it up again for a little more, any more questions. But if not, like we mentioned earlier, we just got to cut it a little bit short this week. So we'll go radio silent for a quick minute. We're going to check over our emails in regards to any questions that we haven't answered as well throughout the presentation. But if anyone has any other questions, just throw it in the chat box. One final quick question in regards to the Fed, our thought process on the Fed side. Members, when it comes to the Fed speak, we listen, read, hear everything the Fed is saying. Clearly, the mindset is all about inflation. The indication is not in regards to a pause or a slowdown or a turn. If you see what we see, if you hear what we hear, I don't know what other people are listening to or what other people are reading, but from what we're seeing, it seems like the mindset of the Fed is moving forward, getting inflation under control, getting prices under control, and that is their main mandate. So, in our opinion, the Fed is not changing tone, has still been hawkish. In our opinion, will be hawkish until we see a possible shift in inflation, which could happen this Thursday with that CPI report. But also, keep in mind, energy prices have been rising as of late, and we all know energy was one of the key drops of the CPI as of late. So we'll see if that has any impact on any future prints. We want to thank everyone for joining us on our weekend webinar. As always, we are recording. We'll post it in the news desk. Thank you. Enjoy your Sunday. Check the news desk to get yourself ready for Monday morning, and we'll see you all on the pre-market prep. TradeXchange out.